We're going to do a little Kahoot again. Don't worry, it is fun. These questions are really fun, so let's go. Okay, so you can scan the QR code. Okay, guys, you're in the perfect time. Take off your phones and scan the QR code. Come on, you have 30 seconds. Okay, let's start. Everybody done? Yes. Okay, let's start. First question. So this is before the crypto exchange panel. And the first question is, have you ever made any money on meme tokens? So yes, never tried. HODL, 95% profit. Minus. What is HODL? I was thinking that. Jessie, what is HODL? Huh? So yes, never tried, or hold on for dear life. Thank you. So everybody answered? Okay. So never tried. Wow. 45% of you. Okay, interesting. So next question. If not Bitcoin, would you be richer or poorer? Yes. I think yes means richer, no means poorer, but it's okay. Raising funds to find my cold wallet in the garbage. Jessie is not sure. So I think yes means I will be richer and no means I will be poorer. Correct? Yes, correct. So let's see the results. If not Bitcoin, will you? So if there was no Bitcoin, you will be richer. No, I'm confused myself. So yes, 47%. Next one. Do you think that exchange employees do insider training? That's a good one. Oh yeah, everybody's nodding like yes. Really, guys? So yes, really no, no, but yes. So they do it. So this is the people we have to become friends with, right? Yes. Who in the room? Okay, okay. Good to know. Okay. So the questions are, wow. So everybody thinks that exchange employees do insider trading. Okay, so we have one exchange employee. Any other? Uh-huh. And there is from M2, he will be in the panel later as well. Okay. So guys, if you want to make friends today, 1, 2, and another one it's outside. So that was the little warm-up for the next panel discussion, and it is my pleasure to welcome on to the stage Jessie Pielke. So let's give it up for him, please. Because now we are diving into the world of exchanges here in the UAE. How do they combat fraud and ensure compliance? So our panelists are Benjamin Grolimund, General Manager of Rain Exchange. Hi, Benjamin. Let's give it up for him, everybody. Benjamin Grolimund. Benjamin, I guess. Then we have Geoff McAlister, Group Chief Risk Officer from M2. Ah, he's your boss. The other way around. I already downloaded the app, by the way. He just told me about it. I already downloaded the app. Now I only have to learn how to use it. And then Anton, Golub, Chief Investment Officer of FredX. So Jessie, the stage is yours.
Thank you so much. Oh, should turn this on. All right, so we have a fun topic on our hands, fraud and regulation. Something that I know nothing about. So I'm with you guys in the audience. I'm looking forward to learning. Similarly to the other panel we had earlier, I would like to briefly introduce you guys, give yourselves 30, 60 seconds, and a fun fact for folks to approach you with.
The first crypto exchange in Switzerland, successfully ran it for 5 years, did an exit. They launched the first crypto market maker in Switzerland, also ran it for many years, successful exit. And now I am Chief Investment Officer and Advisor for FredX. FredX is a soon-to-be-launched crypto exchange targeting global markets, but initially not here in UAE, so not promoting anything here. And looking forward to a fun fact about me. I don't know what's fun about, but I was, for instance, I saw We're talking about, in the last panel, about FTX. I was there to witness the collapse of Mt. Gox. So we started in 2013. A few months later, Mt. Gox exploded. So for 2 years, the first two questions that anybody had when you were pitching crypto was, what is Silk Road? What is Mt. Gox? It was not pleasant discussions, so.
Geoff McAlister from M2. I've come from 25 years TradFi with Credit Suisse, Deutsche Bank, Goldman Sachs, and National Bank of Abu Dhabi as well. I started crypto 3 years ago with Hex Trust in Hong Kong and moved to M2 a few months ago. Fun fact, 3 years ago I introduced my son, who was 12 at the time, to crypto through Axie Infinity and wallets, and buying and trading Axies with him, which was a lot of fun. And now he's a happy Bitcoin holder.
Bitcoin only?
Sorry?
Bitcoin only or something else?
Not Bitcoin only, no.
Okay.
I don't discriminate with crypto.
All right, fair enough. How about yourself?
Good afternoon, everyone. I'm Ben Grolimund. So I'm the general manager of Rain. Rain is the oldest cryptocurrency exchange to have been regulated in the Middle East over 6 years ago back in Bahrain. We run a license and regulation only platform. We now have just over 1.4 million customers in the Middle East between retail and corporate customers that we service through our UAE entity regulated with FSRA, our Bahrain entity, and our Turkish entity. Fun fact about me, I'm not a crypto maxi, even though I run an exchange. I see it as one other asset class in a myriad of investment opportunities.
All right.
And I'm saying this because I see that in that industry, it's quite rare. It's either you're all in or not.
Is it? I mean, questions were the other two. Is it all in or you're not? Not really, right?
Well, with my risk hat on, no. A bit of diversification is good for you.
Yeah, I think I have a different opinion there. I think if you're very bullish on a particular industry, and if you know the industry very well, there is no reason not to be all in. And I'm not talking specifically here about crypto, but if you are expert on AI and you see the potential of AI, not being full exposed to AI for me would be a mistake, especially if you are an expert in the field. So I think in that context, I think it's the right move, but maybe it's not for everybody's risk appetite, right? And I think that also changes as you grow, as you mature. So I was 100% in crypto when I started. I'm 99.9% in crypto now. So we all change our preferences over time.
Big change.
How do you guys, so coming to one of the first questions here, in the UAE, how do you see the regulatory oversight when it comes to exchanges in this region? Maybe we start here first. What's the current challenges? What's the environment like?
I think I'll give you a balanced answer to this. I think it's one of the clearest, most transparent regulatory landscape we have in the world right now. And that's what attracted a lot of global players to actually open entities here. Because when you run a business, whether you're in crypto or not in crypto, what you need is the ability to plan and to business plan forward. And what you want is clarity. So it's not about what the regulation says, it's about having an element of certainty about what the regulation is going to be in a couple of years' time. I think the UAE does that very well. Now, on the flip side, what the UAE needs to still, progress on is an element of unifying the regulatory landscape between the different regulators we have in a small country. And I think at this point we have an element of difficulties with that, not only because it's not the same rules for the same players within the UAE, but also because on the previous panel they were talking about the challenge with banking or with the overall ecosystem. And when you start to want to build bridges with the real world, that real world has struggles to understand what are the rules of engagement when you have different sets of rules into the same country. So, yeah.
Okay. How about you guys? M2, what do you see?
I think the landscape is from the outside, it looks maybe a bit confusing because you have VARA, DIFC even has a framework, and you have ADGM, and you have RACDAO, and ESCA is also getting involved as well. So it looks kind of confusing, but the upshot is they all kind of compete to be relevant, and they actually seem to, almost have a customer service ethic. So my experience was initially with VARA. When I was at Hex Trust, I got the broker-dealer license, the custody license, and investment license. 3 licenses with VARA. Good experience. ADGM with M2 has also been a good experience. I'd say it seems to be maybe a little bit more on the conservative side, but it's a strong and very clear regulatory framework, and M2 is majority owned by Abu Dhabi, so that's clearly our home. But we're also exploring other frameworks as well.
Right. How about you guys?
So, just to make my statement, I think that UAE has the best regulator in the whole world. So now some people then say, well, Anton, when you were in Switzerland, you said the same thing. So how credible is here what you're saying? But I think this is really like an adequate statement. But when we are talking about regulatory impact, there are 2 points there. One is how this regulatory impact defines and enables regulatory players, and then how it unifies the ecosystem, because we as a crypto industry are still dependent on traditional finance players. Now, when we talk about direct impact, if you take a closer look at the list of the regulated companies in UAE on the VARA website, it's a very short list actually. And most of them are companies that are not originally from UAE. So Binance setting up shop, and biggest crypto exchange on the planet setting a shop in UAE and then getting a license is very different than a young crypto startup from UAE getting a license, right? And I can tell you the same example with OKX, with Deribit. And if you take even Xtrust, right? So even if you take a closer look, say how many of these companies are really UAE based, originated, it's very, very few. But when you talk to people, or when you talk to VARA, they will tell you there's a backlog of hundreds and hundreds of applications. So what's going on? Why are these companies not getting a license, right? Because I said UAE is the best place in the world, so we have an opportunity, but I can tell you if we don't take it, the same way I left Switzerland, people will leave UAE, just to make that clear, And now the question is, what's going on really? To get an exchange license in UAE, it takes you between 1 year to 1.5 years. That's not feasible for young startups. Young startups run out of money in 9 months, 1 year, right? Now, what is VARA trying to do, from my understanding, is push the so-called authorized representative model, which is very common in UK, for instance. So you have a big entity that's licensed, and then you as a small startup get under them, and they white label their license to you. So that's what VARA is trying to push. You have a few of these big guys, and then they patrol the smaller people, startups that VARA doesn't want to deal with. And then you will tell me now, Anton, how is that going? How many companies have the AR model in place? And the answer is 0, right? So that's a risk there. And let me just now finally finish. I talked about the ecosystem, right? How important is the ecosystem, because we still depend on TradFi. It's a public secret that in UAE, you have one crypto-friendly bank. And I think we all know who it is, right? So one is Zenbank. It's Zenbank, right? So one crypto-friendly bank. So the whole industry depends on one bank. This is also a huge risk, right? A monopoly for them, great job, right? But a huge risk. In Switzerland, you have like 30. So you walk into Switzerland, you say, with whom will I work with? How do I feel today? Who will give me the best fees? Let's see who I want to work with. Here you come. And if you're not working with Zenbank, you don't have a business. So I think there's a lot of work ahead. I'm not pointing the finger at the regulator or Central Bank of UAE in that case, but it's our responsibility, right? Our responsibility to get the licenses, and in my view, our responsibility to build a crypto-friendly bank.
You said something interesting. You said if they don't get their license, they go somewhere else. but then you also said it's the best place to do it. So where would they go?
They will go to US, for instance. If US gets its act together, they will go to US, the biggest market on the planet. You know, kind of what's wrong with that, right? They will go to Hong Kong. They will go to, many people burned their fingers trying to go to Hong Kong before, to Singapore as well. But this is a competition, you know, like the countries or the regulators not just standing still. Maybe Switzerland gets its act together and, you know, takes over. Europe will never get its act together, so we don't have to worry about that, right? But they will go somewhere else because these companies are burning money. It's investors' money, and investors will just come to you and tell you, get out of that place. You're not getting a license. We need to make money. We need to, you know, do more financing rounds. We need to do an exit. How is that going to happen if you're still waiting for the license? And that has killed many companies, crypto companies, throughout my career that I have seen.
Any comments, Geoff? Or should we go to the next point?
No, I mean, I think we've covered that.
Okay, cool.
I mean, it's clear. It's clear, but yeah, they've obviously got their challenges with the backlog.
I think it's maybe to go to the next point. I think all you guys are in that intersection between regulation and customer service, right? So while you want to have a great customer service, you want people to use your platform, have great UIs, have nice services that enable platforms to adopt regulation easier. How do you navigate that space between usability of a platform and adhering to all the regulations? Is that easy? Is that for the different stakeholders a different job? Do you focus on different customer segments where your workload is slim to none? How do you guys see that? Maybe start with you, Geoff.
Yep, sure. So it is a challenge, especially on I guess on the retail side. If you go back a few years, all the big exchanges, you know, that are big now have probably the advantage that they onboarded a lot of customers before they had to deal with these kind of regulations. So that the newer exchanges, and M2 has only been launched and live for 1 year, and every single customer has to be properly, you know, KYC'd and onboarded with source of funds and everything. So it's like onboarding with a bank. So it's a huge difference for what was there a few years ago with and that's why the big exchanges have such a big head start, and that's a big challenge. For M2, we've got a very, very local focus, and we, you know, as I mentioned, we're, you know, Abu Dhabi owned and the local exchange, and we have a big focus on sort of VIP, high net worth market. So it's sort of not as big a challenge because the volumes in terms of clients is not as big as the retail focus.
Yeah. Anything to add?
I think we need to split the regulations into two parts, because why do governments put regulations on financial markets? The first reason, and the main reason, is to protect the end customer from firms like us. That is not a problem from an UI or customer support or customer experience standpoint. It's how do you make sure that the standards in our firms are at the level where the customer's interests and the customer's assets are protected. You can have great UI and great customer support while you're meeting those regulatory rules, those rules. So from that perspective, there's absolutely no impact. And I can tell you that when I engage with my regulator, the vast majority of the time, the topics are around that part. Then there's another piece of it, which is how do you ensure that there is no bad behavior that happens on your platform from the users that you onboard, okay? And that's everything around anti-money laundering and CFT and all of these type of things. That's where you obviously start to have an element of annoyance to the customer, because you ask the customer for KYC data, you ask the customer for source of funds, you ask the customer for where is that money coming from, where is it going, and all of that types of things. It's obviously annoying for the customer standpoint. And it's, I guess it puts a bit of brakes on the business. That being said, I think we need to realize that it's the trajectory that the entire financial ecosystem has taken. It's not just a crypto thing. When you wire a large amount with your bank right now, you have the exact same problem. So it's not specific to crypto exchanges. It's specific to the financial world and the way that we're trying to ensure that bad actors and illicit funds are being tracked. So I think it's, as long as you're regulated, it's the same rules for everyone essentially. So I don't see that as a real constraint. The constraint is that you're still, I'll complement that. The constraint is that in the crypto space, you are still, for a large part, competing with exchanges that are still operating from unregulated space. So that's where it creates an imbalance, which is not the case in finance, because in finance, most of the financial institutions are regulated, or in that case, they don't even have access to SWIFT. So that's where, but that is moving on. Binance that you're talking about, they're now here, they're being regulated, they're cleaning up their acts. I think that for the most part, if you put aside everything that is on DeFi and on decentralized exchanges, for the centralized exchange business, it's all going regulated, and in 2 years' time, you won't be even speaking about this.
Anton, how do you think about this? I mean, is there yes, it's an even level playing field, right? But then isn't there competition among who makes the annoyance for the end consumer the least, basically?
I think Geoff said it very interestingly, that innovative, interesting products that the clients adopt in the end, they usually happen in an unregulated environment. And I think the best example of a product coming from crypto, specifically it's a crypto product, financial product, is perpetual futures, right? And if you ever heard the story from Arthur Hayes, how he launched BitMEX, he launched and it was expiring futures. And the clients didn't know how to roll the contract from one to the other, so getting stopped out, and then he said, let's make perpetuals, the one that don't expire. Then he gave them too small leverage, then nobody wanted to trade this, so he gave them higher leverage and so on. So when you hear the story, you realize he could have only done that because he was not regulated. So that's the reason why it became a successful product. But today, if you come to a regulator and you tell them, we will gamify the UX and the client can, with a click of a button, do 50x trade, I mean, they will really not like it, right? Because you see it as a cool thing for the user think it's cool, but the regulator just see risks in this highly, it's a very risky product. So I think that the level playing field is not equal actually, because you have offshore, and that's where people go to innovate, to try out things, and then when they grow, they come to places like UAE with their war chest, with their hundreds of millions of dollars, and then they say, let's get regulated now, right? Deribit did similar, right? So we are celebrating they got a license, but until recently they're in Panama, right? So from Panama to UAE, it's a big jump, right? Actually, a positive one, but it's once they build the business.
Do they come back with a war chest and then maybe are partly owned by a company or a fund or a city like Abu Dhabi and work with the regulator to change regulation? Does that exist?
I mean, you can argue that they changed regulation because prior to a few years ago, there was no regulation for perpetuals, right? Kind of equivalent of that was the CFDs, right? Contracts for difference, but it's a different product, right? So I would say they were successful, making sure there is a regulation for a new product, right? And I think they made it, like they really succeeded. So kudos to them. But I think if you're a young startup and now you try to launch a perpetuals exchange and compete with BitMEX, I mean, you're not on the same level playing field, I think, personally.
Benjamin, anything you want to add on changing regulation if you're heavy enough financially?
I was more reacting on the perpetual business, which is obviously very interesting to exchanges because it's a high margin business. Obviously on cash is a low margin business. That's the hygienic thing to do, but eventually exchanges wants to make money on theirs. Now, it's interesting right now for that purpose. Now, if you look a little bit more long term and you look at the fact that we all hope that cryptocurrencies is going to be truly mainstream in a few years, right? Which is still not the case, right? In terms of percentage of adoption of world population, we're not at the stage where people own it like they own stock or bonds or whatever normal or traditional financial markets products. When you look at traditional finance products, there's a very low proportion of people or companies that trade perpetual swaps in traditional markets, right? It's a niche product. So there's two segments in here, and you're going to find actors in the crypto space that are going to focus on the niche of doing a really good business on derivatives and highly leveraged products, and that's great. And there's a business for that. But you're also going to have actors that are going to deal with the mainstream, with people that want to do basic stuff, right? Like your local bank, and at some point there's going to be a bridge between one and the other, because it's not the same use case and it's not the same public.
All right, understood. The bad actors, how do you filter them out?
We send them to M2.
Fair enough. And then what happens?
Look, I can't speak for every exchange, but I think it's pretty common that exchanges want to protect their wallets against tainted assets, and for example, incoming funds are filtered, literally filtered, and can either sort of pass through or be paused or go into quarantine, depending on the history of that asset and where it's been. Right, so they're literally filtering and looking at using solutions like chain analysis and so on to identify tainted assets and keep them out of exchange wallets. So we don't taint other assets and taint our wallets. And there's different levels of sort of staging for pausing and reviewing and filtering those kind of assets. So yeah, literally filtering them.
All right. Anything to add?
Yeah, no? I think you said it very well. One is actually monitoring the assets, and the other one is monitoring who are the clients, right? So every exchange out there looks at PEP, so politically exposed people, or if you cannot prove where you got the funds from, so these things are flagged and addressed. And I think today this is like pretty standard, so like every exchange implements. I want to add one more thing, because we're talking about clients coming in, we're talking about assets coming in. I think it's very important to address malicious ways of assets getting out, right? So we're talking about hacks here. And I had the opportunity to talk to Marvin, who is a cybersecurity expert from Fears Off. So please raise your hand for everybody to see you. Where I learned actually how, I knew it, but not to that extent, how challenging it is for a crypto exchange to have its cybersecurity in place. I think this is the worst thing that can happen to you as an exchange, where you really feel bad because it's your client's assets, right? And then a malicious player comes in and takes them unlawfully, right? It's the worst thing that can happen to, I think, to someone personally. But I also think there's ways to mitigate that, which is what Marvin actually educated me a lot. And I think that's where we need to strengthen the industry. You have white hackers like the team that Marvin has, that actually, in collaboration with an exchange, so you organize a penetration test, or you organize a hack, or you organize a bug bounty, where individuals who are expert, but with also high moral values, right? They try to get in, right? And I really want to emphasize high moral values, right? Because once you're in, the temptation can be huge that you do something that's not, if 100 million is all of a sudden at your disposal, you need to have higher moral values to tell the exchange, look, this is what we found, let's address together the concern. And I mention this because I think Marvin educated me, like all exchanges are, the bigger you are, the more attack vectors you have, right? Is also very interesting. And many of the exchanges are actually white labeled. So if you have a problem in the software that they're white labeled, like everybody's exposed. So really, I think this is an excellent opportunity for us to partner up with experts like Marvin, but also other cybersecurity experts, and make sure that we don't have the problems with assets getting out, right?
That kind of brings me, because if somebody hacks an exchange, the funds usually go across the border somewhere, right? And then they're gone. Do you guys see an uptick in cross-border payments? How do you handle those from a regulatory standpoint? Is there clear regulation around funds going to all different nations in the world, or is that a gray area? Yeah, maybe start here first.
Yeah, no, look, cross-border payments has been a cornerstone of blockchain and cryptocurrencies from day one. Not only for people that really need to move funds and to move money to another country, but also because what we were talking about just earlier was the fact that a lot of the crypto adopters have different platforms at their disposal that they have opened, and they move their own funds from one platform to another because they can trade perpetuals on that platform. They can do off-ramping on this one. They can buy that altcoin that is not listed on their platform on the fourth one, etc., etc. And those platforms are all in different places of the world. And this is just a retail case. But then when you talk about the institutional case, like an exchange, we're connected to 22 liquidity providers. They're all across the world. So the reality is that you end up sending stable coins for settlement, which represents the largest volume of cryptocurrency transfers in the world, because stablecoin is the first volume of cryptocurrency transfers in the world, cross-border. So the cross-border element is something that has been here and will continue to be here for the foreseeable future. So it's not like it's a trend that is gonna become more and more. It's just the use case of crypto that's like that. It comes down after that to how do you control this? How do you make sure that you have the right AML controls in place to ensure that all of those funds come from the right sources or go to the right sources for the right reasons. But the bottom line is that it's not something that you can put in a closed box in the UAE.
Do we have any audience questions? Anything that you guys want to ask? Nada. All right. I think we're a bit over time. Let's close it out here. Thank you guys so much for your time. Thanks for listening. And yeah, let's crack on.